So staying with the uranium story, we now have another exciting project, and to present that will be Bruce Lane, who's Executive Director with GTI Energies, who'll be telling us all about his project in the US. Please welcome Bruce.
Hello everyone, hopefully that sets the scene a little bit and it's obviously pretty helpful to follow on from Murray and the panel. So they've also obviously helped to set the scene in a big way for the presentation. So disclaimer is fairly standard, I'm not providing you investment advice, please do your own research. I want to give you a few key statistics, which some of which have already been discussed today, but the big one is this 50 million pound number. The US is still the world's largest buyer of uranium and user of uranium, and that is around a quarter of the world's uranium consumption annually. It's interesting though, they've only been producing a very small amount, and last year the EIA said that was only 50,000 pounds. That is changing as we speak, and I'll talk about that more. Guy touched on it, 30 to 50 million pounds annual global shortage of primary mine supply to react to demand, and I think his numbers would suggest that that's even higher, and it's only going to get worse because the supply response for uranium mines is slow, and I think that's been discussed today, and you'll see that if you're involved in the sector at all, that is very much a theme going forward. And part of that's driven and reinforced by this bifurcation of the uranium market. So we're going back to the old days of the East-West divide. When the Berlin Wall was up, we've really got the West versus the East in one form or another. But what is happening in the US in response to the price increase and also the friend-shoring and onshoring of all minerals, including uranium, is that we've got 5 US ISR plants either back in production or about to get back into production. We're in Wyoming. We think that's the #1 jurisdiction. I'll talk more about that. There are 7 permitted facilities within 100 miles. I think we said that in the video. We're about 10 miles from Cameco's Smith Ranch Highland, which is the largest permitted in situ recovery facility in the US, and we've got 7.4 million pounds of resources so far at inferred. We think that $70 a pound is enough. The prices obviously we think is going to go higher. I think I'm obviously not the only one saying that, but we think that these projects that we're working on show good economics even at $70 a pound, so I'll touch on that a little bit further. So Wyoming, we've got UR Energy, which is very close to one of our projects within 15 miles, producing now and ramping up. UEC said they're going to be back in production in August. They were waiting for 1/4 of uranium price above $65 a pound, and we've clearly more than achieved that, and so they announced they're going to go back into production. I should note that UR Energy are also just announced 2 days ago that they've pushed the button on their FID, final investment decision, for their Shirley Basin project, which I'll talk a little bit more about. It's a pretty healthy sign for the uranium sector in the US. And we've got Peninsula Energy, who some of you may be aware of in the room, going to be back in production at the end of the year. It's not entirely clear what's happening with Cameco and Nichols Ranch, which is owned by Energy Fuels, but Cameco's entire US ISR production would be somewhere in the region of 7 to 10 million pounds, so it's not insignificant in terms of their overall production, so I think we might see something on that. So our projects, our focus is our Low Herma project in the Powder River Basin in Wyoming, and that's the one that's closest to Cameco's Smith Highland Ranch. We also have a very significant body of property in the Great Divide Basin, and I'll show those on a map, and we have some conventional projects in Utah, which are uranium vanadium projects. I won't talk too much about those today. So on the map here, you can see the yellow dot in the middle is our Lohuma project, which is our flagship project next to Cameco's project. And as I said, 7 permitted facilities within very close proximity. The way that the industry has developed in the US and elsewhere in the world, including in South Australia, is you'll have a central processing plant and then a satellite facility. And the satellite facility will have a bore field and an ion exchange plant. And then the resin beads that come off the ion exchange plant typically get transported back to a central processing plant where the elution, precip, drying and drumming occurs to get your yellow cake. And it's not unusual for the industry to work that way. It is the way it works in Texas and in Wyoming. And also, if you look at Heathgate in South Australia, that's exactly what they've done with 4 Mile. And if you look at the way Boss is projected to develop over the years, that'll be what they do as well. So these assets, these mines, can be somewhat smaller than some of the other mines that you'll see in the world, but the economics are very robust, and I'll touch on that in a minute. So our resources, 5.71 million pounds at Lohuma and 1.66 at our Great Divide Basin projects. We started the year in 2023 with no resources, and this is what we had come the middle of last year. We've also got a fairly significant exploration target there in the range of 12 to 20 million pounds. So it gives us a sort of an inventory at this point of 20 to 30 million pounds or thereabouts. We've got our Green Mountain project as well. There are no resources in these tables for that project. We believe that there's something in the order of 5 to 10 million pounds potentially at that project, although we don't have a resource statement at this point. So in our Lohuma project, what really got us going there is we bought a database last year, and we were able to digitize that and bring it into JORC. So when these projects were drilled back in the 70s, they drilled them with a mud rotary drill rig down to about 100 meters, and then they drop a gamma probe down the hole. And back then they used to use a dot matrix printer to produce a paper log. So we were able to acquire those old paper logs from this project, which had been sitting in a warehouse unloved for the best part of 30 years. Digitize that, bring it into JORC, and then we conducted a drill program at the end of last year to verify it. And that allowed us to get to a resource very, very quickly. So those 880 drill holes which sit within the project, we believe would take somewhere around 3 years to drill those and take cost us about 10 or maybe even $15 million, given the inflation and today's cost of drilling. So it's given us a really, really strong head start. It means we start this year with a project with 900 holes in it already, and we're planning to put another 70, 75 holes in it during this year to increase the size of the resource and to bring some of the resource into an indicated category, and that'll set us up for a study. And that's really what this slide says. So we were able to test our exploration along trend, but also at depth. There's 2 formations here, the Wasatch Formation, which our historical drilling is in the top part of it. There's a deeper part of that which is mineralised, which wasn't tested because they were still focusing on conventional mining back in those days in the 70s. And then there's a formation below that called the Fort Union Formation, and that's what Cameco produces out of 10 miles to our east. So we're going to be able to test all of those potentials in our next drill campaign. And out of the back of that, we'll increase the size of the resource and the confidence of the resource and set ourselves up for a study, which we'll then take on next year. I'll touch very briefly on our Great Divide Basin projects. The Thor project, which is down the bottom, is about 10 or 15 miles away from UR Energy's operating plant. And then and that's where most of our current resources. And then the larger block called Green Mountain at the top is where we've done our geophysics, and we've got about 10 or 12 miles of mineralised roll front identified through the geophysics and through some historical drilling. So we'll permit a program there for this year, and if we get to drill it, then we'll drill it. We may not get to drill it this year, depending on funding and a few other matters. You'll notice to the north of that, there's some yellow dots there. That's Rio Tinto. There's about 70 million pounds of endowment in their projects. Energy Fuel Sheep Mountain is just to the north as well. That's a 30 million pound project. And then we've got UEC projects down below. So it's in a really good spot. We just have prioritised spending money on our Lohuma project rather than getting to this, but we will at some stage in the future in some form. So look, I've really covered both of these slides. What I wanted to do is refer to this slide, which is really showing how sort of an 8 to 10 million pound resource can be economic. Now, what I'm not able to do is show you on this slide, because the ASX wouldn't let us print it, is the economics of these projects. But Shirley Basin, which is 30 miles away from Lost Creek's, Euro Energy's Lost Creek plant, the NPV on that project's around $140 million with an IRR of around 100% based on a uranium price of $65. And I think as you heard Guy say, he said, well, 75 is the bottom end. I don't think anybody could buy a long-term contracted pound of uranium, say 500,000 pounds a year for the next 5 years in North America for anything less than about 85 bucks. And I would suggest even that's going to be tough because it just doesn't exist at this point in time. So we think these projects can be very interesting from an economic standpoint at the current price, and we think they will only improve as price goes up. The capex for Shirley Basin is $33 million. I think it might end up costing 35. That's published. That's all out there in the public domain. UR Energy just announced 2 days ago that they're pushing the final investment decision button on that project. The Gas Hills project, which is owned by Encore, is just to the north of our Great Divide Basin projects, literally about 40, 50 miles, if that. Similarly, capex is around the sort of $30 million mark. Now, they're building a bore field with an ion exchange plant. So if you add Peninsula's elution, precip and drying circuit and drumming circuit, that's another 20 million bucks. So if we could get to 50 or 70 million dollars of capital on these projects and about 10 million pounds, they certainly do look attractive at a price of $75, $80 a pound. The other thing I wanted to highlight was just the valuation differences between us and some of our competitors. So Premier, Nuclear Fuels and Strathmore all exploring in Wyoming for uranium. And these are Canadian dollar valuations. We are the only company that we're aware of that's in Wyoming with pounds in the ground. So we're a resource developer, not an explorer as such in that context. That sits between, so we sit between the explorers and the developers and producers. And so we think that our valuation looks a little bit interesting compared to these other companies that don't have any pounds in the ground. And currently we're getting about $1 or $1.25 a pound in our valuation, economic valuation to inferred pounds. And we think in the last cycle, that number was a lot higher at a $65 a pound uranium price. So we think we're at that point where the uranium price has pulled back, all the equities have pulled back. We pulled back just as Boss did, just as Peninsula, everybody did. And we think there will be a point in the future where we could potentially get a bit more love than we've had in the last 6, 12, 18 months. So just to highlight one person in particular that joined our board recently, Matt Hartman. He's a specialist in uranium and in situ. He's based in Denver, gives us much more horsepower locally, and he's a guy who can run the study for us. He worked for SRK, he's run lots of studies. So Matt joined us recently, a couple of billion shares on issue. Market cap's probably around 18 million Aussie today, and we had $2 million bucks on the bag at the end of the last quarter. So look, that's the summary. I think I'm getting the message that I've run over time, so I better shut up and wait for some questions.
Okay, thank you so much. And any questions on that great uranium project? Okay, well I have one as always. So why US? Is US, uranium better value than any other jurisdiction?
Look, I think because you've got the largest customer on the doorstep in the US, they don't have any local supply. Friendshoring and onshoring is certainly the theme of the day. And the other thing to remember about the US suppliers or the US miners is that they don't have to ship their pounds halfway across the world to get to the Convidine store, to get to the converter, to get to the enricher. So there's already a saving in terms of logistics and there's a saving in terms of risk. So it really, they are the most valuable pounds. I think historically, I haven't got the slide to show you, but I think they are historically very valuable by comparison to other pounds on the planet.
Okay. Okay, thank you so much. And unless we have one tiny quick question, no burning questions, I'm sure you'll be available afterwards, but please thank our
Absolutely.
speaker.
Thank you very much.